All right, it's time for our Monday markets catch-up, and we have to discuss interest rates, which have been going up around the world. South Africa recently saw inflation of 7%, which means prices are rising much faster than the Reserve Bank wants. To tame inflation, the bank often raises interest rates. Its Monetary Policy Committee is meeting this week to decide on interest rates. To discuss, we're joined by economics editor Tshepo Mongoai. Great to have you with us in studio as always. Firstly, are interest rates going up?
Well, the majority of the economists are actually expecting the bank to hike by around 25 basis points this time around. It's on the back of a slew of economic data that we've seen in recent weeks, of course, been on the weak side. And I mean, you've mentioned the consumer price inflation, which is the latest out of many other data that I'm sure the Monetary Policy Committee, which is made of about 5 members, would have to go through and analyze each and every data to see what does it mean for the South African economy, what does it mean for inflation, and especially for their inflation expectations, because that's key in terms of where the inflation picture is going and the outlook. Look at the sustainability of the financial markets as well, and then eventually decide. Unfortunately, what we are starting to see globally, Francis, is that we're starting to see the central bank playing in the realm of the fiscal policy. I mean, you know about the bond purchasing program. And I'm sure...
years ago, we started hearing quantitative easing.
Absolutely.
Everybody wanted to know what that was. But it's gone on and on. It's dragged on, and it keeps coming back.
It hasn't stopped. I mean, with the recent one of the Silicon Valley Bank, that put fear back in the market, and we're seeing that that's starting to ease a little bit. But we're watching the space in South Africa. That what does it mean for the Reserve Bank of South Africa in terms of how does it look at all that in terms of its role in the market? Of course, their role is defined by the Constitution, but everything is unconventional these days. Anything can happen at any time, and our bank cannot be reactionary. It must be on top of developments and have the necessary tools. And I'm sure, I mean, there will be pressure, and there are pressure at the moment for our own central bank to do more to help in the current environment, as we are seeing in other parts of the world. But I'm sure the main concern is the financial stability, and I'm sure if anything happens that threatens the financial stability and the banks, they will be forced to step in.
And that is what the bank says about interest rates, because there's also been pressure, drop interest rates, help unemployment, help poverty, but they're saying then you could have a situation where prices are just rising and rising, and people suffer as a result of that. So 25 basis points doesn't sound like a lot, but this would be the 9th, am I correct in saying that? The 9th consecutive rise?
Yeah, no, absolutely. I mean, when the rate hiking cycle started, I think it's 2001, when it started, and 21, sorry,
about a year and a half ago.
So
the latest one.
On a bond of around R1 million, you were paying about 7,700 somewhere there, and currently it's about just over 10,000 rand. So it's about, over 2,000 rand.
So it's gone up by almost 50%, your payments on your bond.
Around 30%, So it's a huge increase for those who are, having to service the debt. It's just one example. So it's going to affect a lot of consumers, given that consumers and businesses are dealing with a lot of other cost pressures. And what we have seen, Francis, with the recent CPI numbers is that manufacturers are passing on those high costs onto consumers. They have to contain with the high energy prices and high input costs, and it's long that they've contained those prices. But we also know that it takes a while. There's a lag effect in terms of the transmission of monetary policy, and now we are really starting to see that consumers are really starting to feel it.
I like to think of it as a consumer has to pay for the higher petrol being put in their car and then get a higher interest rate on the car because petrol and other prices are going up. So it's this double whammy. We have less than a minute. when could this end? So it's been about a year and a half of just sustained pressure, interest rates going up. When could it end?
There's a lot of volatility in the market and uncertainty in the market, both locally and globally. And it would be very difficult to say when this would end. But the immediate answer would be perhaps maybe this cycle, and we could see the end of it with this rate hike that we're anticipating this week. But the inflation picture in terms of the outlook, it's quite mixed in terms of the risk that could further push up inflation outside the target range. And I'm sure the Reserve Bank will be watching this very, very, very closely. I mean, the international oil price, it's still relatively high, and it still shows that it actually has some biasness towards the upward movement. And the question is how far it can go. And then there are many other risks that we still have, the energy crisis and others that could push up inflation.
All right, so a lot of uncertainty. Many out there, I think, hoping that this really is the last interest rate hike. Thank you very much to our economics editor here at SABC News, Tshepo Mongoai.